Got it. Okay, good morning, everybody. It's an early start, but I think we thought it was good to have an early morning session to mix up the Spark Festival menu of activities happening around the country. And it was also suitable for Adam de Sola Poole, who's one of our speakers today, joining us from Boston in the US. And Enrico is on board with us for the early morning start in Australia. Hello, my name is Melissa Ryan. I'm the Director of Incubation and Entrepreneurship here at Macquarie University. And I'd like to start off our session today on behalf of this gathering. I'd like to take the opportunity to acknowledge the First Nations people of Australia and elders past, present and emerging. I would also like to acknowledge the traditional owners on the land in which Macquarie sits and the incubator sits and pay my respects to their elders, both past, present and emerging. I would also like to extend that respect to all Aboriginal and Torres Strait Islander people here today, whose cultures and customs have nurtured and continue to nurture this land since the Dreamtime. I'm on the land of the Gadigal people of the Eora Nation today, and I'd like to acknowledge the Gadigal people as the traditional custodians of my local area. And it'd be great if everyone in the chat could actually put the lands on which they're actually joining us today for this session on angel investing, pretty much. A little bit of VC thrown in there for good measure. So we've got someone here. Dennis, how are you? He's on Gadigal country as well. Welcome.
Thank you.
So I'd like to start off by introducing also our two guests this morning. We have Enrico Tam, who is one of our experts in residence, and none of our experts in residence actually like the title of expert in residence, but it has been bestowed upon them by our federal government. So we'll go with that. I'd also think, Enrico, you may be more comfortable with entrepreneur in residence. And then we also have Adam de Sola Poole, who's joining us from Boston. As I said before, he's one of our international mentors at the Macquarie Incubator. And I met Adam when I used to work for the University of Wollongong on the Accelerate program. So welcome. So I'd like to take the opportunity to ask the speakers to tell us a little bit about themselves, if that's okay. I'll start off with Adam.
Thank you, Mel. It's a pleasure to be here, and thank you all for accommodating my late afternoon, early evening with your very early morning get up. I hope you all have a good cup of coffee. I'm Adam de Sola Poole, and I helped to start a large number of clean tech companies in Central Europe. One of the better companies I helped to found went on to build the largest wind park in Europe, 600 megawatts. I also did water and wastewater and all sorts of things like that. And since moving to Cambridge, Massachusetts in 2013, I've been investing a fair bit in clean energy and ocean technologies. Thanks. Over to you, Enrico.
Thank you, Adam, and welcome everybody. I see a couple of familiar faces here today, so nice to see that you guys wake up early to listen to Adam and I. And for those of you that don't know me, I've spent the last 15 years building and commercializing tech solutions. And of course, when you talk about tech solutions, at some point you need to talk about investment. It's very common to need to raise money to launch and build and grow your startup. I'm very fortunate, to be honest, that I was able to bootstrap my first business when I was back in Europe, a business that I grew across 3 countries. And then when I moved to grew and sold that business, then when I moved here in Australia 6 years ago, I decided to launch PositiveWise, a company whose mission is to create positive changes in the world through innovation and wise investments. My most recent startup or project. It's called Cloud Olive. It's a company that is building a single platform for software resellers to be able to manage the complexity that they have on a daily basis of having to manage the subscriptions for their customers. And with this company, we went through the traditional venture capital path. And I'm very, very happy to be here today and share my experience as founder and as an investor. And yeah, back to you, Melissa.
Thanks, Enrico. Thanks, Adam. I think the first question I'd like to kick off with, and also anyone that has questions, please pop them in the chat, because I think that's the best way to manage these online forums, to get everybody to have an opportunity to ask questions. You probably have much better questions than I do. So my first one is, having been active in multiple markets, I'd like you to provide some insights into what you have seen as key similarities and differences between these markets. So looking at Europe, the US, and specifically Australia as well, Enrico.
Yeah, so for me, it's important to analyze a couple of different elements. And I would like to start with the mindset that we have in different regions. And if you go to places such as the US, the Silicon Valley, you have this mentality where, you know, it's okay to try and build your own startup and fail. And from an investor perspective, they get it much more than we understand it in Europe and in Australia, particularly for angel investment, where angels are not necessarily sophisticated investors and they don't know the process of launching and running a startup. So for me, having this mindset where, you know, they promote people that try to run a startup versus, you know, they look you down if you try and fail, it's an important element, and it's a big difference from my own experience. Doesn't mean it's necessarily like that for everybody, but I remember when I was in the US, and you could clearly see this mindset that I call go and get it, right? And it creates more inertia behind investment as well. So that's one big difference, which I would call the mindset. The second element that I would like to bring on the table and discuss with Adam is the access to capital, right? And if you want to have a healthy ecosystem, you need both VCs, professional VCs, and angel investors. And it is my opinion, and again, happy to discuss with Adam, it is my opinion that in terms of VCs, we are kind of okay. Like the US is doing well. I think Australia is doing well as well, and Europe as well. The reason is that professional VCs, they come to you typically when you already have a business that works, that has traction, and you know, at that point, everybody will come to you. It's like a double-sided marketplace, right? Investors, professional investors are there, and provided that there is the supply, money is there. That's what I feel, at least. And which brings me to my next point, which is what happens in those cases where, you know, you've got people with ideas, they are not ready yet to raise money through venture capital, and there is a gap where angel investors could come in and help these startups, you know, go to the next level. And here is where I see the biggest difference between the US and Europe and Australia, right? In the US, you've got plenty of tools and instruments. We can talk about accelerators as well. Y Combinator is probably the most famous over there. You've got Plug and Play. You've got many other accelerators that can help you, providing small initial investment and guidance. And the goal is very clear. The goal is to take or to make these startups investment ready from professional VCs. And this is what I don't find necessarily here in Australia, not enough, at least. You can see that it changed a lot in the last few years, but I feel like we could do much, much more in that regard of, you know, building the bridge between people that have good ideas and make them investment ready. The other element that I could bring on the table, it's in terms of incentives that come from or should come from the government. Like one might expect the government to facilitate the creation of startups and the investment into the startup community. I don't know the US that well in this regard. I'm sure Adam will add a lot. I know Belgium and Europe a fair bit, and now Australia, of course. And in places like Belgium, they incentivize investment into the startup community. To give you an idea, there is no taxation on the added value if you invest in a startup as an individual, meaning you invest $100,000 and you exit at $1 million. Well, that's added value. It's not taxed. It's all for you. And as an investor, that's quite appealing, right? And there are other places in Europe. Estonia is one of them right now, where the taxation on the company itself is 10%, if I remember correctly. So they're very competitive, right? And they generate more investment as well. Here in Australia, again, I think we're moving in the right direction. We're not there yet. There is the R&D, there is the MVP grant and other grants and facilitations, but we're not there yet. And with this, I give you the word back. I'm sure Adam can add. I'm curious to get his point of view.
Thanks, Enrico. Adam.
Thanks, Enrico. That is very interesting to me because I don't know the Australian scene very well. I know the European and American. And when you're looking at this, let's say from the moon, they look very similar. But as you drill down, as you get closer and closer to each of these markets, you see distinct differences. Europe, I was just looking at a clean tech battery company in Europe, and it had €1 million from government sources and 200,000 from private sector sources. That would never be the case in the United States. It would really be the reverse, 200,000 from the government and 1 million from private sector. Then when you get down in America, you'll find differences between East Coast and West Coast. The valuations and the risk-taking that you get in Silicon Valley are about double what you would get on the East Coast. But the Silicon Valley side is much more interested in Enrico's type of software businesses than the East Coast where I am, which has a lot of focus on engineering and hardware. And then if you come to the Boston area where I am, you can even drill down and see there's a difference between Boston and New York. New York gets lots of ad tech and fashion tech and finance tech, angel and VC investment. And Boston gets deep tech and health tech and ocean tech and clean tech as well. And so each one of these cities has a really specific focus. And I often say to people in, let's say, the automotive sector, don't go raise a lot of money in Boston. Go to Detroit or Cleveland or Toronto. These are areas where you will find individuals who have empathy for your particular industry, just like Silicon Valley will have great empathy for Enrico's type of business, and they will be much more likely to fund it. So if you're standing on the moon, it all looks the same. Once you're right down in each city, every one of them has their own specific culture and feel, and you got to be local.
Awesome. Thanks for that, Adam. I mean, they're the things that you just don't know, right? Unless you're in amongst the weeds. And I think that's such an excellent analogy, saying that, you know, getting anything from a distance, it looks very different to when you get up close. And I also think that, yeah, Sydney has its definite appetite for certain things, and even the ecosystems within Sydney seem to be defining themselves against certain areas of interest as well. I think it would be great to hear from Enrico about the Australian market. So what he noticed when you first arrived in Australia around investment, and what you've seen since you've arrived. Have you seen an increase in activity and appetite? I mean, the numbers are certainly telling us that. I mean, last financial year, we saw 2.5 billion invested in startups, and 10 days in September, we saw 1.1 billion invested in Australian startups. So it looks like we're at the beginning of some change, I would hope.
Yeah, for me, it's all about awareness and success cases, right? And if we go historically, when I arrived in Australia 6 years ago, there was very little awareness of the startup community and their investment opportunities in general. And I remember feeling the same thing back in Europe, like 10, 12 years ago. When I started running, building startups, almost nobody knew what a startup was and the opportunities around startups, both as a founder and as an investor. And when I arrived here, I felt the same thing. People were starting to learn about startups, and I even remember participating to workshops organized by the government. And the aim was to understand how we could promote startups, entrepreneurship, and investment in the startup community. And it was very interesting for me to see that process of, trying to boost these, this industry. And what I've seen and what I realized is that in Australia, there is a lot of what I can call sleeping capital. Okay, and people have, generally speaking, there are a lot of people with capital that they could divert into high risk, high reward, innovative startups. But look, the problem is that if you look at the facts, right, people don't know how startup works, and they've got alternatives in terms of investment, right? Here in Australia, I even ask myself sometimes, right, if you invest in the property market and you're kind of sure that it's going to give you a return in a few years, like what's your incentive to put your money in high risk startups, right? And I get it, right? If you don't know the opportunities and you've got alternative to put your money, in these alternatives, then why would you invest in startups? And we don't have this problem back in Europe, because like we don't have a sector where we can rely on. And you can really see that in times of struggle, like people have to be creative and come up with different alternatives. And this is what happened in Europe. Here in Australia, I think now we start to realize that we cannot go on forever relying on the property market and the mining industry and oil and gas. And so that process is ongoing. I feel, as I said before, we're going in the right direction. We're nowhere near where we need to be, in my opinion, but it's going in the right direction. And yeah, so that's the main difference. In terms of, I can even add that when I arrived here, there were very little accelerators and incubators, and now you can really see that you have plenty of centers where startup can grow and then investment can come in. And at the same time, I start to see investors specialize in specific niches. Like you find in Sydney a few small investors, you can call them like, or small VCs that specialize in focused areas. And I see the future being like that, having more and more small VCs that focus on their industry, and they do very well because they know the industry. And I think this is a trend that is starting, and it will continue in the next few years. And it's good for Sydney. It's good for Sydney. It's good for Australia, and for the startup community, and for the investment in this startup economy.
Thanks, Enrico. I'd like to also look at, I suppose, Australian startups, and if they're looking to go into other markets and they're looking to source investment in those markets, is there any, I suppose, advice that you could give them about what they'll need to do. I mean, we can start to just look at, say, the US market. I mean, Adam's got a lot of experience there and has had some experience investing outside of the US and has invested in an Australian startup. But I mean, what we've had a little bit of a talk about this, but what do you think Australian startups need to do to attract money from other markets such as the US?
Well, first of all, when an Australian startup comes to me and says, will you fund me? I'm very surprised and leery. I go, well, why won't the local market fund you? So you definitely need a strong local investor who's willing to say, yeah, this company is really going gangbusters in the local market. But then I can talk about two Australian companies that I know quite well that did a fairly good job of getting American investors involved in them. FICO Health from Jervis Bay, they make a seaweed snack and seaweed foods, and they started selling their product into America first. And thus they got champions. They got people who said, wow, this is great food. And it was only once they had other Americans who would stand up for them and say, this is a great product, that they were able to raise money. Or you look at Smart Oysters. They also started selling to oyster farmers and only focusing on raising money in their crowdfunding from people who knew oyster farming and could say, that's a product I could understand and want. Because as Enrico said about Australia going towards these industry-specific funds and angel investors not understanding things, when you pitch to an angel group, there must be somebody in there who actually understands the business, or else you're going to waste your time. Angels can ask you questions for the next year, but until they feel they've answered the right questions and gotten the right answers, they won't stop. And they don't know what the right questions are for your industry unless there is some industry expert in the room. And so you need that person to say, these are the 5 questions only that we really need to ask this company. And once that person hears those 5 answers and says, yes, that's the right sort of answers, and I'm writing a check, then all the other angels who may be doctors and lawyers and not know anything at all about the oyster industry or the seaweed snack industry, they will see that the expert knows it and is writing a check, and so they'll follow along. Angels are very much like lemmings. And this is one of the reasons why, if you've got a good industry VC as your lead investor, that's great, because he can get on the call or she can get on the call with the American investors and say, these were the 5 reasons I invested in the company, and I know this industry, and this is why you should be investing as well. It really takes expert leadership. And if you just go and throw your investment out there, you're going to waste your time and everybody's time.
Yeah, I might just add that I couldn't agree more with what Adam said right now. And it's all about understanding what you're doing and the rules of the game that you're playing. And as an investor, you want to know why you're investing. And unless you've got domain knowledge or somebody in your fund has that domain knowledge, the chances for you to succeed are very low. And therefore, I do believe that having these smaller venture capital funds, but specialized in whatever their niche is, it's incredibly valuable for different reasons, for the money, for then be able to convince other investors to come on board. Because let's not forget that you add value in a startup by keep raising at higher valuations until you exit, and having somebody that can lead that process, being an expert in the field and having the credibility, it's key. And we may talk afterwards about what kind of investor we want. But yeah, what Adam said is spot on. And yeah.
Now, Morgan's put a question in here as well. So what value can the right angel investor provide a startup beyond the financials?
Certainly in America, most angels want to be involved with the company, but not deeply involved with the company. So, for example, just the other day, I was helping a battery recycling company here in Boston that wants to get established in Europe. And I was providing their new head of Europe with connections into various different recycling organizations in Europe. That's the sort of level of added value that investors, individual investors with domain expertise, can add to the company. And it's really invaluable because it cuts right into the chase, and you will jumpstart your investment and have a fun time doing it as well. There'll be plenty of doctors and lawyers and accountants who don't have any industry expertise, but please do find somebody who has industry expertise to lead the round and to help you grow. Enrico?
Yes, there are plenty of things that angel investors can do for you. And one of the questions, or the mindset that I have when I raise money, or when I'm thinking of investing, is always, but let's say when I'm raising money for this a question, and it's important to remember that you need to vet them as much as they vet you. And one question that I ask them, and I really do ask them, and it's very well received, is, if I feel that it's going in the right direction, I ask them, okay, fine, beside the money, what is it that you add what is the added value that you bring on the table beside the money? And some investors might just want to give you money because they feel you're a rocket ship and they're going to make a big return. But for me, the best investor is somebody that is able to add other than money, and you never know what they can do. Like Adam mentioned a few things, but I can give you another real life example. In my network, startups that I've seen succeed big and exit in a relatively short time, they were all startups that had a angel investor in their cap table with connections with the company that ended up acquiring them. And it doesn't mean that it has to be like that all the time, but this is a really tangible element that I'm bringing here in the discussion. So what can they do? Well, plenty of things. In the case I've just mentioned, they can open the door to a potential exit, right? In other cases, they can lead a subsequent round and help you, give you credibility when you want to raise more money. So there are plenty of things, and you need to ask them, what can they do for you? And how can you leverage their experience, their network, whatever they can bring on the table? So ask them, what can you do beside beside giving us capital?
Yeah, I think that's great, Enrico, because that's something that I'm always very, I like to tell the startups that go through the different programs that I've worked on, that you have to be vetting your investors just as much as they are going to be vetting you and doing their due diligence, because it's a lot easier to get out of a marriage than it is to get out of an investor out of your company. They're with you for life usually. So I think you need to be very careful who you take money off, and really understand what they're going to bring to the table, and also talk to people that have taken money from them before. So that brings me to a question that I'd like to sort of tease out a little bit more, from both sides. So what do you look for in an investment? So what are the red flags that turn you off? What are the things that you love to hear? And also, what are you looking for in an investor? What are the red flags, and the things that make you say yes? So from both sides, I think. So Adam, if you'd like to tell us what you look for in an investment, and in a founder.
Well, first I'll start out by saying that when I'm investing in an Australian company, I do look for a lead financial investor who will represent all the other financial investors. There's no way I, at tens of thousands of miles away, can actually be present in the company. And I'm looking that there is some other investor with a seat on the board who has similar interests to mine, similar timeframes to mine, and who will report to me what's going on in the company, independent of the management team. So I look for a representative who is deeply involved in the company. Vis-a-vis the management team, one of the things I look for is that the management team is not wedded to their technology as CEO. Companies go through transitions as they go from a 5-member founding team to a 50-person team to a 500-person team. It takes different skills to be the CEO. There's often a role for the company founders in those companies, but it is not usually being the CEO. And if somebody wants to be totally in control, and this happened to me the other day, I invested in a great company with a really smart, clear CEO who was coming out of a university, and he had a cool software product that's actually doing very well. But everybody who's come into the management team has quit within a few months because this guy will not give up any of his control. And that now is a red flag, and it's a big problem that we're having to deal with at that company. If I can recognize that early on, that's something that I will run away from. One of the other things that I look for is both a quick cash flow. Companies need money to survive. If a company gets to zero, it's bust. Because I've put my money in, it's gone up, but then it's gone down to zero. Nobody's going to touch it again, and it's going to be bankrupt, and I'm going to lose my money. But if they have some product that they are selling that is just paying the bills to keep the lights on, that means that the company is there for tomorrow and next week and next year, and there can always be a turnaround. But when you're dead, you're dead. And that's the big problem with startups, is that they're very close to being dead from the day they're born. And so anything that gets a product out there in the market and has a nice little baseline allows them to get some other innovation that actually allows them to get millions and millions of dollars in the door. Enrico, what do you think?
Yes, very good points. Again, and for me, what's important to realize is that finding product market fit takes time, and it's not something. Well, there are exceptions everywhere. Okay, whatever I say, it's general, but there are exceptions everywhere. But having said that, finding product market fit usually takes a long time, and people have to realize that it might take. I guess my experience is that it takes at least 2 years to really be able to find a product that has some traction if you start from nothing. And that means that you need cash, right? And the first thing in startups is not to die. There are even people that say startups that succeed are those that don't fail. Those that don't die because they go bankrupt. So if you stay there long enough and you do the right thing and you keep improving, at some point you will get there. The problem is cash. If you don't have enough cash, then you always have to knock at the door to investors. And there is only a certain amount of money you can raise before they say, wait a moment, now I'm throwing away my money. And when investors stop giving you money, then what do? Which means that it's kind of the approach that I always had, trying to have a business first that makes me feel that I can go on forever. And when you get to that point, you're almost unstoppable, because you can always add inertia in your product and you keep doing that, and you become even more appealing for investors, because they look at you and they say, okay, this is a solid startup, well managed, and you de-risk it for investors. And yeah, very, very good point, Adam. So I join your position 100%. I may add another thing if we're not running out of time.
No, go for it.
For me, it's also important to always, like when I look for potential investment in projects or startups, it's very important for me to be very lean and look at the three elements of startups, and they are the problem, right, the solution, and the team. Simply by asking a few specific questions in these three pillars of startups, I feel you can make better investments, okay, and de-risk your investment. And in terms of the problem, just look at, is this a real problem? Is this a problem that people are willing to pay for a potential solution or not? Is this a problem that many people have? And that makes you understand how big is the market. And again, why do you want to know that? Because the bigger the market, the more chances for you to generate some revenue and survive and then keep building. The second element, or the second pillar, is the solution, right? Ask yourself, is there any sign of traction, right? Is there any tangible sign of traction? And as an investor, you really want to look for that, because in the early stages, people come to you with a lot of energy, and it might be easy to be fooled by this energy, but just look at the traction, right? What tangible proof you have that the product, that the solution works, okay? And then you need to look for a tangible, like how can you protect your solution if you manage to build it and grow? Is this a solution that can be defended, or anybody can just copy it and and then go away with it, and you spend a lot of time building, putting in the IP, and then somebody else just look at what you've done and copy it, and you lose everything. And then the third element, which is probably the most important, is people. It has been mentioned before, and people. And there you want people that have clear domain expertise. I would never invest in a company unless somebody in the funding team has a very deep domain expertise. Why? Because no matter what you do, you will have competitors, right? This is normal. This is what you want, right? It means you're onto something. And if you have competitors, you increase your chances to succeed if you know the rules of the games better than anybody else. And this is the domain expertise. The other thing that I really look for, it's the energy of the founders. And I call this, you need to enjoy the process. Running startups, it's incredibly complex. And we can have a full session on that another time, but it's incredibly complex. And you will not succeed unless you like this process, right? It's like competing as an athlete. If you don't like it, don't do it. And do not invest in people that don't like the process, because they're going to give up and all your investment is going to vanish. Yeah, I've got other points, but for the sake of timing, I might just skip it for now. These are the main elements for me when deciding to invest in a project or a company.
Well, that's awesome. Thanks, Enrico. I'm inviting anyone that's in the audience, if you want to come off mute and ask and introduce yourself to Adam and Enrico and ask a question, or if you feel more comfortable popping it in the chat. But we're all very casual here at Macquarie Incubator. So if anyone wants to get off, if Des got a question, Marcel, anyone there?
Yeah, hi, I'll ask a question. It's Dennis in Sydney, and I'm a member of Sydney Angels. And one of the most common issues I see is the valuation kind of issue, because it's very early stage, and we have a full spectrum of some businesses. I think are very good value, they're very modest, but some are also very ambitious at a very early stage. And of course, as angels, you want to be supporting and backing and also trying to help and ask these great questions. But is there any guidelines you have in your experience, Enrico and Adam, around how to have constructive conversations, because at the end of the day, they're actually deal breakers. I think a lot of these conversations, and neither party wants to waste time. If you both like each other and all these attributes, but you can't get in some zone on the valuation. So any tips there? And last comment, I often find valuations at the end of the conversation, which I'm not sure that's smart. I actually think sometimes you need to, can we get in a zone? Then let's proceed. But if we can't get in a zone, then we are wasting each other's time.
Yeah, I'm happy to answer. So for me, there is a miscommunication often, or a misalignment on what's important to do in a startup. Like what an investor wants and what a startup founder wants should be the same thing, right? And what that thing is success in an exit, an IPO, like success in whatever that form will be, but it's success for the startup. So before even talking about the valuation, you should talk about how much money do you need to go to the next level, okay? And the valuation can be high or low. If you do not get enough money to bring you from wherever you are now to the next step, then it doesn't make any sense to raise that money. Okay, so that's the very first thing. And investor and founder should be aligned on that. How much money do we need to go to the next level? Because the reality is, even if you raise at a lower valuation now, it doesn't matter, because if that's enough to make you go to the next level, then at the next round, you can raise at a much, much higher valuation. So what's important is the last valuation you have before exiting. You know what I mean? Like the first round, you lose some equity. That's fine, okay? But if you look long term, it's getting there that will give you a return, okay? So I always say first focus on the right thing and don't be too greedy. Then if you look at what happens here in Australia, sometimes I feel like it's, I wouldn't say ridiculous, but when you look at the valuation in the Silicon Valley for a software company, and then you look what angel investor are willing to give here in Australia, it's night and day. So, you know, if you compare it to California and the Silicon Valley, then a founder would feel, why am I doing this, right? Because it's much lower, the valuation here. But as I said, at the end of the day, it doesn't matter. Just focus on getting it done, get as much money you need to go to the next level. And then if you are successful, then you will raise money in the US. If you're a software company, of course, that can expand there. Or so yeah, that's what I can add. It's never an easy conversation, and there is no universal rule. I always more about aligning everybody on the right thing.
Sure. Morgan, you're shaking your head a lot. What's your thoughts?
I think.
Go ahead,
Adam,
Morgan.
No, you go, Adam. No, you.
Okay, you get third. You
Yes.
get to clean up. And so I would approach it differently than Enrico does, Dennis. In the United States, there's a real difference in valuations between East Coast and West Coast. And it's a local supply and demand issue, really. So we often have West Coast companies coming to us that have an idea, and they're asking more than 10 million. On the East Coast, basically, you need to have repeat sales to get a valuation of more than $10 million. On the West Coast, an idea will get you 10 million. And so it's simply just difference in local operating practice. What I do is two things. One is I show them the data from the local region as to what is the average seed stage deal valuation, what's the lower 25% quartile, what's the upper 25% quartile. I show them the facts as to what is local here. And I say, if you can raise the money on the West Coast, go find it. Great. Somebody will get you more money. The other thing I do, and this is a holdover more from Europe, where it's more common than it is in America, is I set ratchet valuations. So if the entrepreneur says, I'm going to have $3 million in sales by end of 2022. And I say, okay, if you get that, everything, I'll give you your $10 million valuation. But if you miss that, we're going to ratchet it down and you're going to transfer some of your shares to me for a penny and it goes back to my $5 million valuation. And so you set these metrics, these hurdles, and if they meet them, they get their valuation. If they don't meet them, you get your valuation. Morgan, over to you.
Nice trick there, Adam.
Thank you.
Well, I love both those approaches. So I kind of feel like you could maybe sort of come up with a little bit of a mix of both of those to come up with the right approach for you. But it's going to be up to everyone's going to have a different approach, and it just has to. I think that the main thing about anything that's in business, it has to feel good. You can't come out of if you have a transaction, you come out of it and you feel like if someone feels like they've lost, then it's never going to end well in terms of that relationship. And you guys are together for a long period of time. So you need to make sure you want to make sure it's a really healthy relationship. So no matter what happens, both startup and both angel investor have to come out of it loving each other. So I think that's my main message is it's all about love.
Good.
Bombaya.
Yeah. Thanks. My offer to summarize between as I love Adam's ratchet mechanism, and I agree with that you want to both have great intentions and good result, but it's much better to negotiate the principles than the positions. So I think if you can negotiate the valuation method more than the actual number, then it's better. But, as you're saying, Enrico, that conversation feels like a zero-sum game because, in the West Coast in LA in the Valley, you can get these huge valuations. Well, you kind of go, yeah, that's great. Well, if it's so easy, go there. It just, you know what I mean? Like it doesn't, if you're in Sydney and it's Sydney, come on, you can't, it's cherry picking, So that's position negotiation, not the principles.
Yes, for me, if I can just add one line, but for me, like I agree with Adam, right? And at the end of the day, as a founder, if I have the choice, right? If I'm in Sydney right now, and if tomorrow you give me the choice, $1 million, 10% equity, or $2 million, 10% equity, if I raise in the US, I would get the money where I need to dilute the least, right? Which is normal. What I'm trying to say is that's fine. If you've got options, you pick the best one. But even in that case, I would look long term, and I would try to get investors that can help me go to the next level. Because if you in Sydney, you can give me other than money. Let's say I've got a business that is in local area, and you can bring more than just money in this ecosystem, and you can help me scale my business in this geography. Then I would maybe pick you, even if I have to give up some extra equity, So I just want to reframe and make everybody understand that investor, and I've been on both sides, and at the end of the day, we succeed if we both succeed. We both succeed if the startup succeeds. So we're on the same boat, and we just need to do the best we can.
Now we've got a question from Warren, which is interesting here, Adam, as well, because Smart Oysters is one of his clients, or I'm not sure if it's an organization or you're an investor group there. Warren, did you want to come off mute and tell us a little bit about that and ask your question?
Yeah, thanks. We're a global investor platform. So we have companies, both Australian and overseas, that we help raise for. And I guess the comment I made is, from our point of view, from overseas, it's really finding the investors and having direct connections with them and really understand what they're looking for. So we've got investor groups in America that only look for SaaS, only look for fintech. Some only look for companies where they can invest a minimum of $1 million. So I'm a little bit off topic because, we do have angels as our investors, but we're not specifically angels. And I guess that's more of a comment than anything, but also just on that current conversation that's been going on, we also, and I think it's truly valid for companies that are looking for smart money, but we also have companies that aren't looking for smart money. They purely, they're doing a convertible note. They want to raise $1 million. They don't care who or where the investors are from. They just want investors that see an opportunity, and normally with a convertible note, then they'll get a discount on the next level of raise. So I guess I've made comments rather than questions, but I'm happy to hear any feedback.
Yeah, anyone's perspective on that?
Yeah, I personally wouldn't invest as an investor. As a founder, as I said before, at some point you need money. Okay, so if you find people that give you money for the sake of giving you money, it's okay. You don't throw it away, right? It's money that comes in the door, and it's good. As an investor, I would personally not invest unless I think I can add more value than just money. And that's my take on this. I don't know everything. Okay, so I'm probably Adam can add on this topic.
Certainly one angel investor strategy is called spray and pray. And I have a friend who writes $10,000 checks based on 30-minute meetings. And that's the only time he wants to hear from the company. And he says, here's the $10,000. Your pitch sounded logical to me. And he's invested in 150 plus companies, and he has filing cabinets full of documents. And he says most of them he's probably never heard from the company again. Some took the check, never sent him the documents, just took the money and ran. But that's his strategy. And okay, most of us laugh at this guy, but it is a legitimate way of doing investing. I don't think it's a really good way. I completely agree with Enrico. If I can't add value to a company, I'm not going to invest in it. And so for a company like Smart Oysters, it has a great leverage utilizing its American clients already that are very respected oyster farmers in America. And they are friends with, well, there's this theory, which I'm sure you all know, which is the small world phenomenon. And everybody is connected by 6 degrees of freedom. So those leaders of the oyster business in America that utilize the Smart Oyster product have friends in the angel community, and that you should use the CEO of their clients, of Smart Oysters clients, to talk to their friends and bring in that sort of money, because that kind of smart money that Enrico talks about is a lot more likely to stay with you and be supportive and do a second and third and fourth round of investment. My friend who does spray and pray, he never writes a second check. And that's sort of useless. The first 10,000 is nice, but that's not going to get a company very far along. Warren, over to you.
Yeah, no, they're all fair comments, and I love spray and pray. I haven't heard of that one before. But yeah, look, there are investors that do that. They invest in 20 companies because they believe 17, they won't get their money back, 2, they'll break even or do a bit better, and 1 will be, 10, 20, 30 multiplier. But obviously you've got to have cash reserves and, know how to do your due diligence very quickly. But, I accept, again, all your comments that some angel investors will only invest in, but we've got the Sydney Angel Group, which someone I think said they were with them, which is interesting because for those that aren't aware, they meet, I think it's every quarter or 6 times a year, look at a handful of companies, and they also have, well, I won't go on, but they've got a sidecar so that when...
Sidecar funds run by Artesian, which are a bit of spray and pray as well.
Yeah, the sidecar, sorry, there's someone from Sydney Angels, do they want to jump in?
Yeah, look, I'm a member. I'm a member, and the sidecar fund matches what the angels invest in. So they don't take other investments. No. You could say the angels are spray and pray.
Yeah, well, the angel investors de-risk Artesian's investment, which they run the sidecar fund.
I'd like to answer Owen's question. which was just put in the chat, which is, Owen, it's impossible to really get through to uncover the true values and character of the entrepreneurs when you do your first investment, because it is just too time consuming. When I was a venture capitalist, I used to go and spend a week sitting right next to the CEO and go and meet his family and go to dinner with him, and you'd learn a lot about it. As an angel, you just don't have that time or the bandwidth to do that. So what I do is I write a $10,000 check in the very early friends and family round, and then use the time I am an investor to actually learn whether this person is good or bad. And so when the next round comes, then I can write a much bigger check, 50,000, 100,000. But once you're in the company, that's your diligence, is the time. And frankly, I wrote a $10,000 check to this young person who had the great software idea, and now I'm not going to write another check to him at all because he's refused to give up any responsibility to the rest of the management team, and he's a crappy manager. And I've learned that. But I can afford to lose 10,000. I can't afford to lose 110,000.
I can add something on that, and what Adam says is absolutely true, and it's not easy and it's time consuming to have 100% confidence whether they're good or not. But having said that, there are signs that you can pick on very quickly. And I learned that we all tend to be often too nice, or we think we see what we want to see, and we don't actually pay attention to the details enough, and we're not critical. Like that's what I use. I always try to have a critical mindset and put all the biases away, okay? Because I might not like the person, or for some reasons biases, but you really need to be good at picking up the critical elements. And I'm fortunate because in a previous career, I think I had more than 2,000 interviews trying to hire people. So I got very good at spotting what people say and what people don't say. So I'm particularly good at that because I got a lot of training. But I can give a very practical example. We turned down an investor that was or could have been a very strategic investor for us. We turned him down because after we agreed on all the terms orally and even via email, we agreed at 100%. And then we already told other people that the deal was done, which is a mistake, by the way. Until you've got the money in the bank, do not ever say that. But we did it. And that investor came in literally like at the moment of the signature, wanting to change something in the agreement. And we said no. We said we agreed on something, and we decided not to move on ourselves, and we turned him down because the reason is you don't want to be with people that do that constantly, right? If you do this now, then you're going to do the same thing in the future, right? And if you were not sure enough or confident enough, you might have said, okay, I give up and I get the investor in. But I knew that I was going to buy problems in the future if I did that. So we were strong and we turned them down, okay? So there are signs like this that you can find all the time. You just need to be able to see them and not put them aside, and just look at concrete and be critical. Like use critical thinking as much as you can.
Okay, I think that's a wrap. We've just clocked 8 o'clock. It's been brilliant. Thank you so much for your time and intellect, Enrico and Adam. And thank you very much for everybody in the audience that has contributed to the discussion. It's been awesome, as always. We often have sessions with Adam throughout the year, so we'll make sure that we promote them. Follow Macquarie University Incubator. Obviously, Enrico is one of our experts in residence or entrepreneurs in residence. So yeah. Thanks very much. And any other comments, please make a comment, or if you want to come off mute and thank Adam and Enrico yourself. No one's going to come off.
I'll jump off and I'm very new at this, so this was just learning for us. So yeah, really, I really enjoyed it. Took 3 pages of notes and really, really enjoyed it. Thank you.
Thanks, Liz, one of our founders at the incubator. So yeah, that was awesome. So have a lovely day, everybody.
Thank
Peace
you.
out.